Hello again and welcome back. Thanks for tuning in. Things are really starting to get interesting in the real estate market. So interesting, I don't actually have to talk about politics this week. Well, not much anyway, but let's get into the news and the data from the last week or so. All right, so first off from Ben Rabideau here. Actually, I met with him last week. Thanks for the lunch there, Ben. So this chart is wild. What is going on out in BC? So the new listings in BC, monthly seasonally adjusted, over 17,000, first time since 2010. So we have like record high listings in BC right now. And of course, this is not unexpected. If you watch this channel, I've been calling for increased inventory just with the speculation dying down and investors trying to get out of the market. But we're seeing it in BC now. And we've also seen this in GTA and Ontario now for a few months. And further from that, we have from Steve Saretsky, there's a lot of unsold condos sitting on Vancouver developers' books. This is what they call shadow inventory. So this is shadow inventory that's most likely, or it's not on MLS and you don't see it. But you can see it goes back to 2017, this chart. Let me just click on it here. It's a little clearer view. And up almost 12,500 units, unsold inventory under construction or new construction on the builder's books, and most of this or a lot of this is not on MLS. So this is shadow inventory. So inventory in all kinds of places right now. And on that same theme here from Shazzy Goli here, Toronto landlords are in full panic mode. The number of apartments offering move-in specials has surged yet again, now at 2,350. And he did this maybe a week or so ago, maybe a couple weeks ago. This isn't just an oversupply issue. It's a slow motion collapse of rental demand. Landlords are fighting to keep tenants. But what happens when incentives aren't enough? The cracks in Toronto's real estate market are widening. And what lurks beneath isn't pretty. And here you have it, 2,350 move-in specials now in Toronto. I actually just had a call on one of my listings. It was in Milton. And the tenant called me up and asked, some questions. And then they asked me if there was any move-in special. And there was no move-in special on this one. It was actually ended up getting rented out. But I said, well, what kind of special are you talking? And they said, well, we'd like a month or two free. And I said, well, let me ask the landlord. And anyway, it did get rented, that place. So there was no move-in special there, but there's tons of move-in specials. And we saw this in Calgary and Edmonton first. Here it is. Toronto apartments skyrocketed from 1,852 to 2,258, a staggering 406 unit increase overnight. So wow, that's a lot of inventory, a lot of move-in specials out there. And here's another one from Ben. Pretty clear home ownership divide in these results. Canada is failing young people. And of course, if you're a young person, you already know this. And we hear about this every day. And I deal with it in my day-to-day lives. I wish you guys could afford a home. My favorite thing to do in real estate is to sell young families and young people homes, get their first home at an affordable price or somewhat affordable. I know real estate's expensive and it comes with the stresses of making those payments, but it shouldn't be this out of reach. But this is from CD Howe Institute. Canada ranks 15th in the 2024 World Happiness Index, down from 5th in 2015. For those under 30, Canada ranks 58th, one of the worst declines globally. Once the happiest group are now the least happy in Canada. Now let's just take a quick look at this chart. So there it is, the dark line there, the dark navy or black line below 30. And you can see, look back from even 2008 to 2013. It was up near one of the highest or up very happy. And now it has declined. We've seen big declines. And I don't blame you. You work, you go to school, you do whatever you have to do, and you can't afford anything because I guess the older generations got everything gifted to them, or it seems like that from what you guys have to deal with. Now, I just want to make a quick comment on this map. This map is floating around. A lot of people have commented on it, and you might have seen it already if you're into social media, especially on X. So if Canada has a housing crisis, why don't they build houses within the red circle? And if you're Canadian, you probably know why. But it's a good point. They could make more northern communities, but of course, people want to live as southern or in the southernmost parts of Canada as possible, as warmer, closer to the Great Lakes, closer to the U.S. We know as Canadians, but again, it is a lot of land there that we have in Canada that has been underutilized. A couple of quick stories here. This one was actually from February 9th, so just over a week ago, from Beth O'Donoghue. Just got off the phone with another realtor. She just closed on a pre-con downtown. She paid $770,000 for a one-bedroom. It did appraise, surprisingly. Yeah, we've heard about the blanket appraisals. That's another issue altogether. I'm not going to get into it on this video, but of course they're coming in with these blanket appraisals and appraising these units over value just to get them done so the builders can close the deal and the bank can start collecting the interest on those payments. However, it's going to cost $4,000 to run, and it will only get about $2,200 in rent. She's the top 1%, very good at what she does. No one's safe. So yeah, it's almost only collecting half of what she's going to be taking in or for expenses. So $4,000 a month it's going to cost her, and she's taking in $2,200. And so I don't know how you're going to get out of that. Like, you either have to dump it and lose money, or you just sit there being cash flow negative. Maybe make a lot of money elsewhere and you can offset it. I don't know, but not a good situation there. Another one from Shazzy here. The Ontario condo bubble has gone from bad to apocalyptic. And he tags Ron, the mortgage guy. I don't know if this is Ron's client or who it is, but this is what Shazzy has to say. A woman just called a mortgage broker panicking. She has 8 pre-construction condos closing this year. 2 in March, 4 in June, 4 in September. That's like, that's 10. Let me see, 4. Anyway, whatever. She's got a bunch of pre-cons closing. Prices have already fallen 15%. She can't assign them. She can't get a mortgage. She raised $500,000 from overseas family just to close. Hopefully that's legal money, not this illegal money laundering stuff that's going on. And the monthly negative cash flow, $1,800 per unit. This isn't a housing market. It's a financial graveyard. Wow, that's and you know, I think I commented on this. I spoke with somebody last year. You might be watching, and I think they had 2 or 3 pre-construction condos last year. So yeah, this I would believe this for sure. People really just went all in speculating, right? You got to take risks to make lots of money, and she would have made lots of money if the market had kept going insane. But she took the risk, and it looks like she's going to lose here. All right, let's get into the national stats. They just got released this morning, so I got fresh data for you here. This is pretty exciting stuff. A lot of changes happening. But yeah, so they even say here, national statistics from Korea, new listings jump to start 2025 as tariff uncertainty weighs on sales. So we're blaming the tariffs here on the real estate market. And you know, that's what it's turning into now. It's who do we blame for the way the market is? Not that the market's going to keep ripping, it's going to go higher. Now we're going to start blaming people as things go south. And of course, they're going to blame the tariffs and whatever else they can blame. But let's check out some stats here. All right, so first off, the national residential sale price in Canada, and it's currently at $670,000. Now, I did want to point out that in December, initially, it was claimed to be $676 when they came out with the December's number in the January news release from Korea, and they revised that to $690,000. So they do revisions, of course. Not every board reports, but and same with the revisions on certain stats like months of inventory and supply and whatnot. But again, all the boards don't report, but that's a big change. Usually it's $1,000 or so. This is over $14,000. They've revised from $676 in December to $690,000. That's a 2.1% revision. I don't know what happened there, but I caught it because I have all the numbers on my own database, so I see the changes and those revisions, right? So anyway, to now we're down 3% month over month from that revised December to this January. $21,000. We're up 1.1% year over year, which is not a lot, but I'll get into that in a second, or $7,000. And we're down 17.8% from the peak in 2022, $145,000 down from that $815,000 peak. Okay, so here we have the year-over-year price changes. I just talked about it was up 1.1% in January from January 2024. And you see over here on the right with the red circle, we've seen those year-over-year increases, but they're declining now. We're almost even, so it looks like we're going to be trending into negative year-over-year price changes at this point, but we'll keep an eye on that. And you can see how they trend, right? They go up and then they go back down. It's a very smooth kind of transition. Sometimes we do have a big jump, but usually it's a pretty smooth trend that it follows. And the average residential rent in Canada dropped again, only $9 from $2,109 to $2,100, but it did drop again, and we're seeing those rents drop. I don't know how much further they can drop, but I'd like to see it under $2,000 for sure myself. I don't know about you. I'm sure you would too. And the mortgage payment dropped again. I can't remember last month's number, but it's now at just under $2,900, $2,889, and that is, of course, at 20% down this mortgage rate on the average house price at prime minus 1%. And here's the difference again. They're getting closer as the mortgage payments, the average mortgage payment continues to drop. And of course, the rent payment isn't dropping as quick. But we're what, $789 apart now. So that gap is closing. Still needs to close a lot more to make it more beneficial to buy over renting, especially with all those down payments and extra costs when you buy. The inflation numbers just came out today. I believe it was 1.9%. I haven't even had time to read into it. I just saw it flash across my screen. So it is back up. The inflation, it's still within that target range. But that brings us to this chart, which is the national average price adjusted for inflation. So in the blue, we actually have the nominal prices, or the prices that you hear monthly, 670,000 as of January this year, 2025. And the inflation adjusted 446,000. So that's adjusted for inflation. That's about 95% higher than it was in 2005, which is the base year here. And and this is to do with monetary policy that has caused this, and fiscal policy is responsible for the rest, in my opinion. This is the politics I'm going to talk about. Not blaming any one government here, but this is both these numbers, whether the prices went up 95% for real prices or 193% is what we see now at 675,000 or 670,000. This is all a product of money printing and monetary policy by the Bank of Canada and the Government of Canada. This is not because your hard-earned money isn't worth what you earn. It's just it doesn't buy as much anymore because of the policies. So this is the total sales in January for across the country for all of Canada here, as reported by CREA, and they're pretty average there, 41,000 or something sales. So the sales haven't been really too bad. They've been kind of on average, very close to average. So again, it's not anything out of the ordinary. But now the new listings. So the new listings have gone up. Let me just move my head here. New listings, look at that, has gone up over about 1 million new residential listings. Now this is an annualized seasonally adjusted annualized rate here. So this would be, say, for a whole year on Realtor.ca. But look at that. You have to go back to 2021. This is all the data that they provide, mind you. I would go back further if we had it. But the most number of new listings annualized and seasonally adjusted in the past 5 years or so. Sorry, 2020 was Q1. So yeah, we're seeing this inventory. And again, we've called for it. We're seeing inventory keep increasing. What happens? Where's the supply and demand, people? Supply and demand, right? We're getting more supply, so that will start affecting prices in given time. And here we have the months of supply. It is back up to 4.2 months of supply right now. Still a little bit lower than I'd like to see. I'd like to see it get to 4.5%, 5%, because we'll still really see some good price action at that point. But again, it's been bouncing around there, hasn't been dropping down. And with all those new immigrants and all this increased population in Canada, the supply is holding pretty steady. And here is the months of inventory just for January. The last chart was all months. So this is just January to see how it compares. 4.2 months, same as 2023, 4.2 months, and the same as 2019. We had 4.2 months. So again, it's good to see what we're seeing, these consistently kind of higher levels than we've seen in 2021 and 2022. But yeah, I'm sure we're going to see that increase in the coming years even higher. And just a little more perspective here. This is the sales to new listings ratio. It's currently at 49.3%. This is the lowest since January 2019, so the lowest in over 6 years. Now, this is a national sales to new listings ratio, not like we see in Toronto where it's at like 30% right now. But this is the lowest. 2023 in October was the second lowest, and it almost looks the same on this chart, but it's actually 49.4. So yeah, we're seeing this sales, meaning it's more into a buyer's market. It's still a balanced market according to CREA, but we're getting closer to that buyer's end of the market, and it is the lowest in over 6 years. So again, reflection of the market and what's happening with this data, right? Again, not of any surprise to us. I've been calling this with the trends, and we have the home buying recipe. We know which way it's going. So again, this is not a big surprise. Okay, warning to any homeowners, speculators, anyone that's really sensitive to data going down. Do not continue any further in this video. Just turn it off right now. If you want to see what this data and what it is, this is the Toronto Real Estate Board data. We're going to take a look at the epicenter of this preliminary February numbers here in Toronto and the GTA and the Toronto Real Estate Board, actually. Okay, starting with the February sales to new listings ratio. Now, I did post this on X, but this is an updated one. I went back to 2006. We're limited on the system, Toronto Real Estate Board, on how far it goes. 10 years on the one, and then I have to dig further in and manually pull this data to get further from like old news reports and stuff. But I did get it back to 2006 now. This is the lowest right now. This is the first 18 days of February this year, and this is every February going back to 2006. February's one of the biggest increases in prices. Anyway, I'll get into that in a second, but it sets the tone, just like January does too, and for certain things, February also does. So yeah, let's look at this here. The only other time we had a sales to new listings ratio this low was in 2009. Sorry, I shouldn't say this low. Close to this low. It was a lot higher. It was 8% higher. So the second highest sales in the listings ratio, I should say, 39% in 2009. Now, what happened in 2009? Well, 2008 was right before it, right? So you can see most of the time it's we're in a balanced market in February, and if you see the good years there, 2016, 2017, 2020, 2021, 2022. Actually, 2020 was pre-pandemic, but yeah, it was all in the sellers markets, which again is not that uncommon. But look at this year so far, 31%. I checked it yesterday and I checked it again today. It was still same number, 31% deep into buyer's territory. And usually February in Treb, and especially in the GTA, is a fantastic month. So this is, again, setting the stage for this year. I just don't see how things are going to turn around with everything that's happening in the economy and geopolitics and all the rest of this. But again, this is not a surprise to us. This is all based on these historic timelines that happen. I talk about all the time. I'm probably going to revisit it again in a future video, or a very near future video, just to remind everyone that this is all part of the cycle, and it's playing out as forecasted. Now we're going to look at the month-over-month price changes. So I'm going to explain this chart to you here. So again, February is a key month, and this shows you this. So this is every month, and these are the month-over-month price changes. So whether it's February to March, March to April, every month, how much do those prices increase month over month? Now February I've outlined in black here. Every year. And that little gray line separate the year, the vertical lines there, so you can clearly see it. So every year, look at 2015, 2016, big increases. February usually sees the biggest increases, or actually they are the biggest for every year. The only one that wasn't, it tied, and that was 2024. It was 5.9%, and it was a tie with whatever other month, September or something. So that was the only year. February wasn't the biggest, but it was tied with the biggest. But every other year, look at it. The black line is bigger than any other line in that given year. Look at this year, 0.3% we're at. Other years were 5% and above usually. 0.3% for the first 18 days of February. This is the lowest month-over-month price increase that we've seen in a long time. And again, this February is a key indicator. I can't stress this enough. This is not just stuff I'm cherry picking here. February always sets the stage for the pricing for the year. But yeah, not good. I'm sure March will look better. We're going to see some sort of a spring market at some point, I would assume. But yeah, this is not good. Okay, now lastly here we have those black lines I just showed you on the previous chart with all those Februarys. This is them isolated now, just every February, showing the month-over-month price increases from January to February each year. And look, they're all over 5%. 5.1% is actually the lowest number that we've seen in 2018. 2018 was a slow year, actually. It's 2018, they started raising interest rates in 2017, slow the market, and we had a slower February. But it was still 5.1%. Even in 2020, prior to the pandemic, not a great year, but we're seeing that new year, the February start, right? And we get all this exuberance in the market and this activity and excitement, and this is what happens. But look at this year so far now. It's not over. This is as of February 18th, but I do track these mid-month a lot of the times, and it gives you an indication of how the month's going to end. It might improve. Maybe it'll go up 1 or 2%, but I don't think it's going to be 5.1%. So again, pretty slow year there, and just an overall representation of how this year is most likely going to play out. But again, I'll say it again, this has been forecasted from historical trends and whatnot, based on, I do my forecasts, and based on interest rate hikes and slowing economies and unemployment trends, and this is not a big surprise. All All right, so that's it for this week. What do you think of these numbers? Do you think it's just too early to say? Is it the cold weather? I don't know how it's been in Vancouver with the inventory out there. Is that due to the cold weather? But in Ontario, it has been pretty cold. Lots of snow. We got a big snowstorm. Planes flipping over on runways and whatnot. But or do you think this is based more off of the emerging trends that I've forecasted and just the slowing economy? Anyway, let me know in the comments. And until next week, I'll see you then.